What's up? Stephen Johnson stocks, record month, $15,000. I think after that's net, so after the fees, it's 13,717. As of, I've got the flu a bit, but as of this time last year, from January last year till now, turned $660 into 97,148. So I hope there'll be a $600 into 100,000 in 18 months or whatever I did it in. It's super cool. There's times where I've cried with absolute joy and disbelief that I've managed to achieve this. I had a lot of role models and idols who I looked at and saw like they'd made 100,000. And when I first got into the game, I was like, if I could just make $100,000, I'd be the happiest person on earth. And I like respect and revered these like any trader who'd made over 100 grand like had me ultimate respect. So like to be in that boat with the people that I once respected and be one of them. Not that it's there yet, but it's close. Um, it's a great feeling, but it's like it's almost not real. And when you get to 100,000, 100,000 doesn't seem like that much anymore. You immediately look towards 255 the mil. Will I make a million in me trading career? Like, there's absolutely no doubt. But when I was losing, there was no doubt I was going to make a million. It's about having that fucking insanely powerful drive that you just fucking know. Like, I just knew in my head, I was like, there's no way I'm not going to do this. Because I just had a flair and a sense for the game. Not as much as others, but I had just a flair and a sense for the markets. And I was like, especially when I started data tracking, I was just like, I have the ability to get this. This is my fucking show. This is my street. Like, this is my house. Like, do you know what I mean? This game is in my wheelhouse. Like, I just knew. Someone was tweeting, "Is this you must get out of bed feeling like $1 million every day?" And I have to say that making money and having money doesn't really change your life. I've got a bunch of freelance stuff as well, so that 15,000's like I've actually made more than that off freelance and other stuff as well. Combined, it's like financially doing really well, but it doesn't make you happy. Like for me, there's still something in my life that's missing. That I'm still not quite there. Do you know what I mean? I've definitely been happier when I've not had money any. When I've been on credit cards, I've been happier than probably I am now. And it's not no pity party. I'm just giving you the fucking real transparent story. But say I meet a fit bird and I'm traveling Bali and I'm got a lot of money, then I'm probably gonna be fucking euphoric. Do you know what I mean? So money's one human need, success is one human need. There's many others, but without rambling, just to kind of answer some questions of what I've kind of changed in my strategy is I just really make sure that risk rewards on my side. Always like if the trade isn't 2 to 1 risk reward, 3 to 1 risk reward, there's no point taking it. Or if it's not evens risk reward, but you win 80% of the time, then there's no point taking it. Or if it's not like 10 to 1 risk reward, but you win 30% of the time, unless it's something like that, I don't want to take it. Um, and it's then just over time I've learned more different patterns. I've got better at entries. I've got better at just saying the same pattern over and over and over. And I've got the biggest thing is I've really got a sense of, so say I've got 6 patterns that I love. I've got a sense of how each pattern is responding in relation to the current market and how it was playing out last month compared to how it's playing out this month. So stocks that gap and craps. Last month, fucking dropped out the open, all of them. Now they're a bit more bullish. Now we're seeing 945s, we're seeing some reversals. So it's like, well, don't short the 940. I would be rigid on the gap and crap strategy of just short the push, short pre, short the push. But now I'm much more aware of the market conditions and how it can change. And I'm like, well, why would I short pre-market if none of them start even looking to die until 9:45, 10? And if a lot of them are reversing, then I'm only playing the most bearish ones, and then I might look at them at 11 o'clock. So really aligning trading with with the overall market, and we'll leave it at that. But yeah, it's always what can you lose before what can you win, managing risk. Leave you with that. Bit long-winded, but it's all important. And whether people find it entertaining or not, I don't care. I just want to give the transparent picture. And and that's it. Let's go into the Excel. So we're running quite well. winning days 85%, losing 10, didn't trade one day, 15,000 profit, minus 1,300, borrow costs 13,700. Um, me green days are much bigger than me red days, and I'm winning much more than I'm losing. So definitely a sizable upable strategy. And I'll probably in particular be sizing up on these two setups, probably 400 risk now and 350 risk. Like I'll add 100 risk onto both. In the rest, I'll just keep the same because I'm just not making enough money off them really to scale just yet. So PRPO is definitely one of me kind of bigger screw ups. I mean, we know that it can have these crazy runs, so you'll get a lot of momentum longs, like running these 1 to 8, and we saw that on the 4th of May, except it has a big green day, then it gaps down. Well, on this occasion, it gaps up. I mean, I'm never going in on the first green day. It's too scary. I've made that mistake too many times, but I'm definitely looking at the price action the next day. I'm looking, and when we get this kind of gap, so from the 470s to the 540s, whenever we get this big gap up, I know that once it starts to panic, people will sell and take profits. And when the momentum shifts after, so like for example, anyone who's long this, thank the lucky stars they didn't get a major gap down. When they get the gap up, you think, well, this is a stock that's gapped down previously, so the fact that it's gapped up, they're scared at some point this is going to happen. Like this stock doesn't hold its highs. It went from 1 to 8 and then it came back down to the twos. So the next time it goes from 1 to 9, it's probably going to end up back in the twos, and you can see it's in the threes. So you're looking for that first sign of panic where people are up more than they should be. They want to be getting out near the top long. Shorts are looking at getting in near the top, and it's just one of my favorite patterns to short. Unfortunately, I really got thrown off by the volume because a lot of these panics straight out of the gate. Once they start panicking, just everyone sells because everyone's just in profit. They don't want to give back money. But this volume, 1 minute volume here. I think it's like when we got this indecision candle. What I mean, 2.7 million is a big red flag, and I'm watching this thinking this is bullish. The fact that we had 3 million at the open, it dipped. There's a ton of buyers underneath looking to catch the dip for it to rip up like dip and rip, and then we just immediately like very strong way into new highs with very high volume, and for whatever reason I got caught short in the way up on this, and just too aggressive on a setup that had too much volume. And as it happened, I mean, look, I broke rules, added, and I got out okay for like a few hundred. But this was one of the times where I had a bad drawdown that I shouldn't have had. The sad thing is even if I'd shorted into the first halt, stopped out for a couple of percent, re-attacked into this big red candle weakness, risking higher day, I would have had from the 850s, I would have been able to quite comfortably hold down here into the fives. It's like a 35% gain, where instead I was covering in the sevens because I needed to get me size down because I was in too much with too bad an average. So I was covering, and I mean, I reshorted. This was a beautiful short. Reshorted this little squeeze here in the sixes and recovered back down in the fours. So in the end, it worked out quite well, but it was one of the worst trades of the month for me. Even though I made money, I don't want to get back into these habits. Yeah, and certainly to the long side, I've got a lot better at longs, but when we get these super clean charts, I mean, when we get these really like beautiful trend breakouts, I mean, you've actually got the perfect kind of wedge breakout there. When you get these perfect runs, you don't need to be in day one. You don't need to catch day one. I mean, this is in play for several days, so I mean, I've hit some of these quite well, but I'm doing nowhere near as good as I should be. So we know that this is popped on the 7th, popped on the 10th. It keeps on making higher lows. It keeps on looking stronger. But so you should always be waiting and watching for this to explode at any time. And we get some small signs. That's not really anything special, but it really sets up well here. Again, it's not It's not perfect. You've got like a bit of a weird wedge there, and you've got a wedge within that wedge. But you do have the bottom, the higher low. You've got three higher lows there. You've got the bottom, the higher low, the higher low. The price tightening. Sorry, that last one needs to be cleared, but the price tightening. I'm just going to clear out all of these. You've got the bottom, the higher low, and the wedge, which leads you to the perfect buy when it breaks through. And I totally missed it. And it just, I mean, it's from 48. It's 100%, and it's obvious. Like, it's obvious. It's not obvious that it'll go 100%, but it's like almost, when it happens in hindsight, it's obvious. So disappointing to miss that one. So with AMC, I mean, these three big green days in the gap up, it's just really overextended, and it's like a meme Reddit stonk pump. So it's never gonna last. So it's just waiting for this short reversal, the parabolic reversal short, and stupidly took a stab pre-market. Don't know what I was thinking. I was down 100. And then when this pushed at the open, usually what I would do is wait for a hard crack and let that hard crack set a resistance level that I could play off. So when we've got this high of day and this hard red pull, this red candle down to the 32s, I would normally be looking to short into a bounce, getting somewhere in around the 34.60s, risking the high of day. So I would have gotten 34, risking 36. And yeah, my risk gets tested, but it doesn't break. And then you've got to hold for the rest of the day. Stupidly being addicted and obsessed to playing front side, I just didn't do that. When it got up to the 34s and 35s, I thought this is up too much, 36s, and I started building into a short, not with huge size. Then when we got this crack, I started adding, because we had the confirmation, but what I found is this bounce was a little stronger than I anticipated, and I got in too much big size, thinking that was the death crack, and then I had a few moments of being scared, like down 800, down 900, down 1,000 on the day. I was thinking, and that was a bit of a scary few moments, but ultimately we got the crack. I covered into it, and then I had work calls, so I missed this next leg down. I was gutted, but in hindsight, honestly, I mean, you're risking from what, 35, 34 to 37. You're risking, it's 10%. To be honest, it's such a big range on this. 340, 370, 34 to 37 is 10%, but you're actually getting like 30. It's like 3 to 1, 2, 3 to 1, something like that. But yeah, I mean, even if you're taking like $10,000 position, you're risking $1,000. So either way, the way I played it is, I would have had to cut it through higher day, but I wouldn't have cut it. I would have let it break, and if it didn't fall straight back through it, if it held this level over and under, I would have been out. But I'd like to think I would have been. But yeah, didn't play it ideally. Too scared to get in the reshort, and I basically missed that. I was on a work call, but next time I play this, I think I'm definitely letting a higher day establish, and then I even just very small size in this area. Just be careful with your ads like this. You don't even need to play this. This ultimately is the short that you need to take. The second leg, the backside. And that's a wrap, guys. The only other thing that I would say to you is don't quit. Just don't quit. I mean, if you've been doing it for 5 years and you're still losing money and you haven't made any real progress, or you don't really have any real sense of the market, then maybe quit. But if like you'll know yourself, like, are you getting this more, or are you as the same amount lost as you were the year before? Because for me and my growth, every single year were like breakthroughs, like breakthrough waves of thinking, I get them, fucking hell, I've got the market. And then I was like, well, no, you don't want to get the market at all, but you get it a bit. And then I'd have another breakthrough thinking, now I get the market. And I'd be like, no, you don't get the market at all, but you kind of get it. And I kept on having these breakthroughs, and now I've like had more breakthroughs. Like, me longs are really good. I can't wait for the market to get bullish. I think I could probably make more long than short. But then in a couple of years, I'll probably think again, you didn't have a clue what you were talking about 2 years ago, 2 years from now. But if I could ever, I'll leave you with this, if I could ever say to myself 4 years ago, with knowing what I know now, it would be, I would say to me myself 4 years ago or 5 years ago when I started, talk to as many traders as you possibly can. get to know them, get to know their strategies, research the trades of all of the other traders, see what they're doing, see what works for them, see what doesn't, and basically piece up the ultimate fucking trading system slash machine process based on 100 different styles to form and combine and give birth to your own style. And work harder than any other motherfucker. That's it. I work as hard as you possibly can. I'm not fucking doing Jack Kellogg hours. I'll not get Jack Kellogg money. I'll never beat Jack Kellogg ever, ever trading. But I wouldn't mind being quite close to Papa John.